What if I told you that your business could be worth 3, 4, or even 10 times more without adding a single new customer? It sounds unbelievable, right? But it's 100% true. I've built and scaled is the trade school and the investors club and even a cafe that have failed miserably, Cafe Zebru. And through all these experiences, I've learned one secret. It's not about how many customers you have. So that one metric, that's the lifetime value that changes everything. The same company with same revenue can be valued 3 times or 5 times or even 10 times higher just because of this particular number that pay you in the lifetime, right? That's a kind of long-term relation that you're keeping with that particular customer. So most business owners think, I just need more customers, more and more and more every time, more sales, more ads. That's the classic. See, you can spend lakhs on ads, you can shout on social media and still end up broke if your customer don't stay or buy again from you. So the idea is to make him buy again. Let me show you how it company be. Okay, so company is obsessively chasing new customers every month, burning money on ads, high churn. Now company B focused on retaining the existing customers by serving them better and getting repeat sales. Now both company B is valued at 5-10 times higher. Why? Because their revenue is predictable, revenue is higher. The expenditure also lesser. There you need to keep spending on ads for attracting that new customer. It will be valued much higher. So predictable revenue means lower the risk and higher the valuation, right? Now, why predictability is the holy grail? When someone invests or buy your business, they're asking, if I give you 1 crore, how? So if your revenue is volatile, depending on, random ads or viral moments, it's risky, right? So no one will be interested to invest in that. But if your existing customers keep buying again and again, and there is a stable income, so that's why investors pay that premium for those companies with strong retention and repeat purchases. So the investors will also look at this retention of the customers and the repeat purchases from the same customers, getting that lasting wealth. So I always talk about this lifetime value of the customer that you keep increasing. Let's define what is this game-changing metric. That's the lifetime value. So LTV is nothing but average order value multiplied by customer's lifespan. So that tells you how much money an average customer brings to you during their entire journey with your brand. For example, in IAS Academy, like the students join at, let's say, minimum 3,000, and then they buy the interview batch, and then they buy the test series. So when you're getting confidence in the first product, then you will buy mains, then you'll go for interview, then you'll go for the test series for prelims, and then test series for mains. So you keep getting more and more products. So 30,000. So if you are not retaining that customer, you spend on ad, and the next person also will be spending on ad. So ad spend is doubled, but the next person also giving you 35. But if you are focusing on the other, to 1,50,000. But if you get a new customer, you will again get 35,000. But instead of 35,000, you are getting 1,50,000 there without ad spend, right? So if you look at that lifetime value over the 2 years, that's 1,50,000. 499. And then if he's not returning, I keep spending for that ads, but he joined for another, then after that 3 day, we have a boot camp. So he'll join for that 3,000, and then he'll take a mentorship for 1 year. That's for 50,000. So that someone is coming for that masterclass, I'm leaving, then I'm spending for that masterclass and I'm not getting anything from that. So ultimately you will end up in loss. Another student, like he's coming and joining mentorship again, after 1 year, he's renewing the access, and then he buy advanced trading, investing parts and everything. So the lifetime value keep increasing. So the same lead, different journey and completely different business outcome, right? So why LTV change everything? Let's try to understand. Think about it. If one student is worth 500, do you want to run? When your this lifetime value goes up, 4 things happens automatically. First, your profit explodes. Second, you can spend more confidently on marketing. Third, you don't want to spend for bring the referrals, they bring the new customers, you're not spending on that. And your business become more investor friendly. And the referrals and the customers they are bringing, they will join 100%. On ads, you will get the leads of 100, you may get conversion rate of 10. That's not the key against your service. And there's certified also. So here you'll stop, depending on new leads every day to survive. So your profits will explode. You can spend more confidently on marketing. Your business becomes investor friendly, and you stress for the sake of survival. That's not the case. You are looking and sitting on profit in this case. So again, if you see the power of expansion of revenue, that's the biggest secret in business. See, grow what you. The point is, before you look after new customers, make the new existing customers satisfied and extract maximum from them. You know how to make a sugarcane juice? Exactly like that. You give that sugarcane once into the machine. That's the lead. Then you take everything. That's what the lifetime value is ultimately all about. So here, expansion of revenue, that means earning more from existing customers by serving them the best, serving them the deeper, and no maximum from that, right? So when Trade School added from this one webinar to the bootcamp to the combined mentorship to the one-to-one mentorship, right? So these are in fact profitably doublings. Also, we added, prelims companion along with prelims, then prelims companion, and then mains companion. right? Interview companion, and test series, makes sense problems, etc. We are keep adding, and the revenue is jumping through on new leads. You need better progression path for your existing ones, existing business, existing clients, right? Let's also understand the CAC versus LTV ratio. There's a formula that every serious acquisition cost that involve the ad spends and other marketing parts mainly. So CAC, the customer acquisition cost, okay? LTV, lifetime value. So this ratio decides whether your business like 3:1. You're burning too much to get too little. And if it is between 3:1 to 5:1, it's healthy, sustainable growth. And if it is above 5:1, it's world-class investor attractive business interest. So in simple terms, and that customer should be worth 3,000 to 5,000 over their lifetime. Then it's good, right? So that's what I mean by this. So you're spending 1,000 to get that lead and you're getting 5,000. That's 1:5. Crazy. So that's when your business start. Again, what are the ways to increase the lifetime value? Let's be practical now. There are only 3 ways that make your customers worth more. See, uh, if you want to get that retention. Retention is the #1 driver of valuation, right? Getting cost because you got that lead. Now your job is to keep them. How you can keep them? Nail onboarding. You can, get them experience the results fast. So if you're coaching, especially in trading coaching, when you're giving the live market mentorship, if you're coaching students, joins, and then if they don't feel progress in the first week, you will lose them. But here that's not the case. So that is more work. It again depending upon the business. In trading coaching, I can show them in live. This is what progress. So that's what the first one. And then the builders, you can build stickiness, right? That means integrate your brand into their daily life, like Telegram groups and app logins, regular check-ins, etc. So that they stops attending, or you can message them personally. So if a trader stop posting profit screenshots that you used to see earlier, you check what went wrong, like that. So see, you need to be proactive. That stickiness part or nail onboarding, all these are the 3 ways in which that retention part. So retention is not luck. It's something which can be designed and you can implement that professionally. See, Disney spent millions, perfecting your first experience because they know that if you are emotionally hooked, right? So that's very important. So get them to buy more often. That frequency need to increase. So you need to find natural ways for customers to engage again and again. If they attend one webinar, invite them to bootcamp. Next. So if they join the mentorship, then offer you something like alumni networking or investment learning, something like that. So, or you can introduce, usage-based pricing, like Dropbox charging more for extra storage, or gym membership upgrading to premium access, like that. Even small tweaks like exclusive templates, advanced without any new leads, with the existing leads, right? Again, you also need to know what is the average order value. When the academy, Bank Academy, the Civils Coaching Academy, introduce the bundle packs like prelims plus mains plus interview, it immediately raises the average spend by customer. Right? Of a single webinar, the same story. So people love convenience and value. If you design your product, like wisely, the product stack, you see McDonald's, right? You see KFC, the stack that lunch meals, right? You can convert to meal just by adding this. Ultimately, what it costs and what they are getting. So the customers will also be happily spending more, and you will get more average order value also. And the next is pain. That is how you can build that stickiness. So in coaching, what we can do is we have the apps and everything through that they'll get access to classes, the test series and everything. So they'll have to, once they switch on, they have to come to our app. So that stickiness will be there. You can collect useful data starter, not through force, but through value. You have to keep giving them the value. For example, in the classes, when we are saying that whatever I take in this session will be uploaded in the platform. So they have to log into the platform. That's if your platform is irreplaceable, no competitor can, approach your audience. But if you are replaceable, it's your fault, not theirs. So they will they won't stick onto you, they will move to others. They will move to others. So that's a human tendency. We seek in others what we also do the same thing. We seek in others what we lack in ourselves. They came to you, but if you can't provide that same, they'll look at others also. And be always proactive. Predict and prevent the churn. Drifting away. So in trade school, we tag initiative or these users like those who are not attending the Zoom sessions. Right, or those who are not regularly watching the recorded sessions, we can get the data. So we do the follow-up, who's completing how much and what, and etc. We used to send personal messages to them. And in civils coaching also, if a student skip a test or a class for 1 or 2 weeks, our mentors reach out to them manually. I will ask them, what is this? Why is it happening in the classes, but I'm not able to see their name when I'm taking the session? So I'll regularly reach out to them personally because I know there should be some problem. It could be some big losses they might have made in between. So I am the one who should talk to them and bring back them to a normal scenario and see technology can tell you who's at risk, but only empathy retains them. So that empathy that you need to show from your side. Why this make you 10x more valuable? Let's take a quick example, the one which I've discussed, business A and business B. Business A, 100, but business B, each customer spent 100 per month. and he stays for 3 years. So year 1200, 3 year 3600. So lifetime value 3600. Here the lifetime value is higher. So the profit from that person is also higher. Lead cost, it remained the same for both. Same product, cost of acquisition is same, the lead cost is same, but one business 36 times is more. So here the ratios, what the partners, so the acquirers, acquisition part, they look for, whether it's predictable, whether it is having long-term customer relation, that retention, repeat purchases, there are not that show that stability. And stop measuring just cash flow, measure the lead, right? How much profit did I make this month? That's something like a short-term thinking. The real question is, or the real question should be, how much is my business worth if I stop working tomorrow? That's net worth thinking. That's what retaining customers, repeated purchases, the increasing frequency and average spend, your cash flow grows, but your business valuation multiplies, right? Even banks look at that when you apply for the loans as well. Everyone is looking at the same only, cash flow, repeat purchases, and stability. Action plan for this quarter. Now, you don't overcomplicate it. You don't have to fix everything today itself. You understood your problems. You understood what you need to do. You need to retain the customer. So ask yourself, is the retention or the frequency or spend per purchase? If you can make more frequency, do that, right? So pick one lever and go all in for next 90 days. That's the next quarter that you need to do. Measure it, document it, and then move to the next things at once. It's about doing one thing consistently over a period of time until that compounds, that give you massive result. So guys, let me leave you with this important point. Like every founder want to make more money, right? But very few actually build more value. Ultimately, more money will come from more value. The more value you give, they give back. So money is the outcome of value, gross value added, right? GVA, like GDP. So value doesn't come from ads or followers. It comes from systems that make them stay with you. So that's the difference between a business that pays you monthly and a business that can set you financially free and make you financially stable. So stop chasing new customers every single day. Start compounding the existing ones. To master that, you won't just have business. You will have an asset worth many times what you ever imagined. So that's all what I want to discuss in this. Thank you so much.